Now we're talking about equity day in, day out, but the one asset class that has surprised everyone and in fact has bolstered your portfolios in all probability is gold. But there was a warning that the Securities and Exchange Board of India sent out just day before yesterday, and this has to do with digital gold. Let's talk about what digital gold is in the first place. This is essentially 24-karat gold that is sold in a digital format. Who sells this? Various platforms, usually fintech platforms. Paytm has something like this. You have Gullak, which is another platform that sells this. It has an equivalent, according to the sellers, of that digital gold in physical form that is sold in a vault and insured. Now, the pricing of this is tied to the wholesale market, but then it can vary from issuer to issuer, not issuer, but seller to seller. And there is also a 3% GST that is allocated towards that. Now, why is this a problem? Why is digital gold a problem? There are a few things that stand out. First of all, that 3% upfront GST that you have to pay. Of course, when you buy physical gold also you pay this, but when you buy an ETF, a gold ETF, you don't pay this 3% GST. And so therefore, there's an immediate impact on the cost when you're buying this from an investment standpoint. The price setting mechanism is not transparent. So there can be significant differences between the physical market as well as the digital gold that is sold. There can be stipulations on how much you can invest. In fact, some platforms say you can invest a maximum of 2 lakh rupees. Some say that you can hold for a maximum of 5 years. So there are stipulations, whereas gold ETFs you can hold forever. Now, beyond this, what has SEBI said? It's actually saying that this is entirely outside of the purview of SEBI. And why that matters is that it cannot guarantee the completion of a transaction or the protection of your money if something goes wrong. Specifically, what they've said is that they may entail risks for investors and may expose them to counterparty and operational risks. Counterparty being that the person selling you the gold may not fulfill the whole details of that transaction. They say that none of the investor protection mechanisms under securities market purview shall be available. What should you consider doing instead? You should consider looking at gold ETFs if you have a demat account. As of the last count, we don't have the latest data, but 90,000 crore rupees at the end of last month in these ETFs. And there's also, if you don't have a demat account, gold mutual funds that allow you to invest in an SIP form in these in this asset class. So there are safer ways to go out and invest. Particularly, these are guaranteed by the Securities and Exchange Board of India, and that is the most important thing.
Okay.